and welcome to the Financial Fox TV show. In this episode, I will be focusing on alternative investments such as cryptocurrencies and the new shift towards decentralized finance, otherwise known as DeFi. My aim is really to give an overview of this market to investors and traders who are not so familiar with it, so they can basically understand the opportunity as well as the risks, but also familiarize with the key players. So for this episode, I will be joined by the British investors Clem Chambers, who is also an award-winning financial author and CEO of the London-listed financial news platform ADVFN and the blockchain developer Online Blockchain. Hi Clem, how are you?
I'm good, thank you. I'm getting crushed today at the market, but apart from that, everything's great.
Okay, talking about market and investment strategies, in one of our previous videos, you talk about crypto assets being one of the strategy to use against inflation together with gold. Do you want maybe to expand a little bit more why you are so bullish on crypto and maybe explain a little bit the difference or the comparison there are with gold?
Well, first of all, I think you have to focus on the word strategy. And strategy means long term. That's really all it means. And, you know, if you are going to act acutely, then you've got to act tactically. And this is not a tactic. It's a strategy. So crypto is the place to be for many years to come. It's one of those things that you would buy and you could leave alone for 5 years and never look at it and come back and go, where's my private keys? Where's all that money I lost? No, you could come back and you would have made a lot of money. And I think that is the key with crypto. It's emergent. It's still a new thing. Most people don't get it. Most people don't know how to get it. Most people don't understand what it is. And therefore it's in a niche of people who, what I would call in a kind of modern argot, the tip of the spear. Yeah, it's the tip of the spear of finance and the future of money. Yeah, and what makes it unique is that it's an explosion of technology into money. And you know, when you think of online banking, that's a relatively minor thing, and it's taken a long time to show up, and a long time for people to want to use it, a long time for it to become a big thing. Crypto is the next generation. Crypto to online banking is like high-speed broadband was to using a modem. Being on the internet with fiber as opposed to being on AOL. Yeah, it is absolutely revolutionary, changing technology, and it's going to be huge, and it's only just started. And that's the interesting thing. Now, the brand is Bitcoin. That's the one everybody's heard of. If you look at Google Trends, it's a brand as big as the NFL, and yet, in fact, it's probably worth about the same as the NFL. It's worth that little. If you bought all the Bitcoin that's outstanding, if you could, it would be one medium-sized NASDAQ company, a couple hundred billion. Yeah, Apple is worth 5 times what Bitcoin is worth, and Bitcoin is going to be a feature for years to come, generations to come. Now, the good thing about it is, roughly speaking, you can't just print it. You can't do what the American government just did, increase the supply of Bitcoin by 30% because you switched the machine on and it printed them. Not with Bitcoin. You can with various other cryptocurrencies that have an infinite supply and all sorts of rules. Because basically crypto is money plus politics plus computers. When you design a cryptocurrency, you design its governance, you design its rules, and it's very, very, very difficult to change them because there's nobody, particularly in certain cryptos like Bitcoin, in charge. No one's in charge. You have to basically get together in a parliament and argue about it for months before you can change anything. And that simply doesn't happen very often. In fact, I can't remember the last time it happened with Bitcoin. I think it's about 4 years ago. So the supply is inflexible. And in fact, supply is rather like gold. It gets lost. I mean, if you look at the history of the world, some societies fell because they lost their raw materials. They literally lost them. Bronze Age ended, or there was actually a very large collapse in population because the easy bronze extraction ran out. It was hard to get hold of bronze, and you know, you lose your daggers and your axes and your nails And if you're a Bronze Age guy, you throw him in the lake when you die. You know, the warrior dies, you get his weapons, you throw him in the lake, like old Camelot time. So they ran out of bronze. Effectively, they ran out of money. They couldn't make any more, and they couldn't support the population. And the population between the Bronze Age and the Iron Age fell by 75%. And Bitcoin is a deflationary currency. So in a few years' time, there'll be probably less of it because some people have lost some. So even though it's not being made, you can still use it. And because of the way that it's denominated into Satoshis, and 100 million of them, you could actually have Bitcoin worth 18 trillion if every single Satoshi was worth a US cent, for example. So as a currency, it's very, very flexible, but its supply is very fixed.
So would you agree that Bitcoin is the new millennials gold?
Well, somebody told me a few days ago that gold was boomers Bitcoin. Because, you know, if you said to me, you want to buy gold? And I said, I do. And you would say, why? I said, well, you know, there's rough seas ahead. Okay, well, why wouldn't you buy Bitcoin instead? Bitcoin's better. You can take Bitcoin in infinite quantities through an airport. In fact, it's not at the airport, it's in the ether. All you need is your private keys. You could write them on the back of a postcard and post them to yourself in New York as you get on the airplane. Well, not that you want to do it on a postcard. You know, it's already there. The moment you have a Bitcoin, it's in another country. Gold, yeah, you try leaving the country with more than $10,000 of that, and you get some funny looks, and you might spend some time with a policeman. Yeah, try doing it with $1 million. Then you're in trouble. You can't do it in cash for $1 million. So Bitcoin, the moment you own it, it's gone. It's an international currency straight away, which is why it's been so popular in China, which is why it's so popular in Iran, which is why it's so popular with anybody that's at all worried about their situation.
I think one of the points that maybe investor and many people are concerned is, as you said, is a market that is evolving. So it's the future of money, but at the same time there is obviously a problem of education, there are risks, and also there are quite high commission, and also security is a concern. So do you think people should just acknowledge it and say, right, I'm just gonna get exposed to something that in the future is gonna be big, but at the moment is what it is?
I think we've all been through this learning curve, and I know you have been too. And that is, you go, what is this thing? And you go, oh, okay, it sounds amazing and weird and strange. People tell me that it's amazing and it's the future. Well, I better learn about it. So you learn about it. I better buy a couple of $100 and play with it and see what happens and try to get it through my skull. Right? And you go up the learning curve. And then at some point, after you melted your brain a bit, in a couple of years' time, you get it. You totally get it. Hey, you know, hey, maybe you can pay me in Bitcoin. Oh yeah, great. Here's my hash address. Yay. Yeah. I've got a credit card from Coinbase where I can go into shop and I can buy a bun or a pint of beer with Bitcoin. But I pay for it in dollars or euros, and then they convert my Bitcoin into it. I've got that. It exists. It lives. Yeah, it's already here. But most people go, oh, do my head in. And it will do your head. But then it's like, how do you expect to survive the coming future if you're not prepared? It's not going to be a cakewalk, what's coming next. You've got to get your running shoes on, right? You know the joke about the two guys walking through the forest and they come across a grizzly bear. And one guy drops his pack, pulls out a pair of running shoes and starts putting them on. And the other guy says, you'll never outrun that bear. He says, I'll outrun you, and that's all I need to do. Yeah, and that's the kind of world we're going into now. There's definitely a bear out there, and we definitely want to have our running shoes on. And crypto is one of those things which is like a pair of running shoes. It gives you the edge. You know, if you were somebody who wanted to leave Russia, you were a Russian and you wanted to leave, and today was the day, Bitcoin would be the way to go. I mean, you know, it's a very, very solid way of protecting your assets. But it's not what everyone should do to protect their assets. It depends who you are. If you're a saver, well, maybe you want to put a small proportion of your savings in on the hope that maybe it's going to get a great return in 5 years' because that's after all what savers do. But you don't want to go making a big position in it because you're not a trader. You're not even an investor. You're a saver, right? So as savers, you'd want to pick the lowest risk way of doing it. You know, you want to put £1,000 into Bitcoin, make sure put it on an exchange like Coinbase, forget about it, and come back in 5 years and see you getting on. If you're an investor, well, you might want to be thinking of putting 5% of your portfolio into gold and crypto, and maybe only 20% of the 5% in crypto. If you're a trader, well, then you're looking at DeFi and you're thinking, God, DeFi, that's the most amazing thing I've ever seen.
Yeah, I did want to come to this point because obviously we have been talking about Bitcoin only, but there is a big craze out there about this DeFi and the new evolution of the financial markets.
Well, I don't see it like that. I really don't see it like that. Banks have been declawed, defanged by regulation, and they're just shutting up shop. If you look at it, I mean, they're shutting up on the high street. They're all going to be a website. Well, what's going to happen to them then? You know, they're going to kind of vanish, aren't they? And DeFi, online banking, is going to be a thing. It's a thing, and it's going to be a more and more, ethereal thing. And the brands in that space are going to be more and more fractured, and there's going to be more and more people, and there's going to be more and more banks you've never heard of. I mean, I keep finding banks I've never heard of, and that's the way that's going. DeFi is something different, and it's basically because now there's computer money, yeah. Because if I want to send you £1, I can go to my bank and I can send it to your bank account, and there's the £1. But here with computer money, I can give money to your computer, not to Barclays Bank's computer over there, your computer, your mobile phone, yeah. And I can give you a crypto. I can give you all sorts of gadgety things. It's all computery things now. It's gone from a physical idea that has gatekeepers and middlemen and controls to a computer thing, where it's gone from like a kid when I was 9 and buying little toy cars. I had a little toy car, I pushed it about. Well, that was my banking as well. I went into a building society. I gave them £1, they gave me a little book with £1 written in it. Well, with DeFi, it's like me getting on GTV5 as opposed to my little plastic toy. Now I've got a complete 3D simulation that's 120 frames a second, that's photorealistic, and I'm driving the streets of San Francisco like a lunatic. I mean, it's a many orders of magnitude more sophisticated and amazing experience than pushing a dinky toy along. Dinky toy. Matchbox toy. So, you know, DeFi does for banking what GTV5, whatever it's called, Grand Theft Auto, does for toy cars. Well, one, it makes the toy cars obsolete, apart from a load of old collectors. And two, it builds a massive industry. And three, everybody goes, wow. And it becomes the future. And DeFi has crossed that barrier now into like old 1980s driving games when you get little pixels going. It started.
We have seen so many projects, they are actually going deeper into the concept of DeFi. So, for example, lending cryptocurrency or decentralized exchange or infrastructure, how to build the liquidity in the centralized market. So these are all projects that are all popping up. Do you feel comfortable in using these projects with your crypto?
Yes, no, maybe. I use them in these projects and I feel incredibly uncomfortable. But if you're going to, there's a fortune to be made there. There's a massive fortune. Now, whether DeFi is like Microsoft in 1989, or whether it's like Microsoft in 1999, or whether it's like Microsoft in 2003, I don't know. But you certainly want to hold their stock. You certainly want to know what the devil they were doing, and you certainly want to pay close attention that whole time, all across that 35, 40 years. You want to be watching them like a hawk. You want to understand what they're doing. You want to be able to know that by the end of 30-year period, they're going to be worth $1 trillion. Because when they were worth $80 billion, there's a 15 times uplift over 30 years. All you have to do is know which one was going to survive and which one was going to do well. Buy it and leave it. Apple at 17 cents. Yeah. Amazon in 2003. Yeah. Well, you know, You wouldn't want to buy Amazon now, maybe you would. But you certainly should have bought it in 1998, certainly should have bought it in 2003. But you've got to understand what they're up to. I mean, I didn't, right? I didn't, because I'm a value investor. And, you know, the American stock market, which I on now and again make a lot of money in, I'm never comfortable with those blue things. Never comfortable. And I'm not comfortable with much of this DeFi because it's insane. But I do know that it's going to go up a lot. And the winners are going to be worth absolute fortunes. And now they're worth 300 million. You know, that's like, I don't know what it's like. It's like buying a rabbit on the NASDAQ, isn't it? 300 million. It's like a nothing. It's a knob. I mean, 300 million, less than a billion. Are there any companies on the NASDAQ less than a billion? But some of these companies, well, I look at about 20. The three of them are going to be worth 200 billion in 10 years, and the rest of them are going to be bust.
Do you want maybe to mention some project that you really like, or you know, you think they?
Well, yes, I will. But first of all, I say it's insanely dangerous. If you haven't got 100 grand worth of Bitcoin in your wallet, you might not want to play with this. Yeah. If you haven't got Bitcoin and Ethereum, and you're not totally believing in those things, you probably don't want to play, right? Because it's super dangerous. It's, you know, I used to own shares in Novell. I didn't, but you know what I mean. They're not around anymore. Yeah, WorldCom, what a great outcome that was. You know, all those guys, Enron, yeah. The world of financial instruments is plagued with fraud, and this is going to be no different than all those ICOs. Yeah, exactly. And some of these companies were ICOs, and now, well, they've delivered 12 out of how many? Yeah. So it's a very, very dangerous game. And this is my strategy. Okay. Buy the brands, play with the offerings. If they haven't got an offering that works, you need to be very careful. I mean, I bought one, just a drop, you know, a £5 grand lump of a DeFi project. And there it was. And I went on their site, and it was offering an ability for people to bet on stuff. And it had a Donald Trump bet. And I thought, yeah, I'll bet he's going to lose. £125 worth of Ethereum just to do the transaction. Well, that's not going to work as a site for gambling, is it? So, you know, their thing had gone up 80% the last week, so I sold it. And I wouldn't go near them again. But I keep an eye on them, and if they rejigged their software and the software started to work properly, and it didn't cost $120 to do a bet, then I might look at them again. But it's a skill game. It's very, very, very dangerous, right? I mean, within weeks of me buying certain of these things, they doubled, and I dumped them. And then all the ones I had bought, they're down about a third now. And do I care? No, because they're going to go up 200 or 300%. Maybe. But, you know, if you know that sort of game that you're playing, which is a high risk game, and you might lose the lot in 5, and the 6 might go up 10 times, you're not going to be uncomfortable. But that's not a game many people can play, because A, they can't afford the risk, B, they don't have the constitution for it, and C, they don't have the experience. So it's a very, very, very risky area. But you do have an opportunity to win if you do your homework. And there's a lot of interesting products. So, as I said, unless you've got nerves of steel and you are skilled up and you're very comfortable, you're already in DeFi, frankly. Yeah. But for a novice, I'd say learn about Bitcoin, learn about Ethereum, get really comfortable with those own ideas. You know, if you want to invest in those, invest in those. And until you are invested in that sector, going into DeFi is going into the lion's den. Okay. But if you play with a few lines in your days, then that might be something that you'll succeed in. I like Maker. They've got a interesting setup. They're producing a stablecoin. That's very interesting.
They've been around for a while as well.
They've been around for a while. There's Aave and Compound. I'm not so sure about Aave, to be honest with you. I've got some tokens in there, and it's just mad. I mean, 2 days ago, it was $125 to get out a chunk of tokens back to my wallet. Today, it's $25. 5 days ago, they were paying 53% interest on one of those tokens. Today, it's 0.5%. I'm not impressed by that. Yeah. Compound if you put your money there, they actually give you their compound tokens, and that's worth about 3% return a year, 4% return a year. And you can, stash it on some stable coins and get another couple. So you can get 5, 6, 7% there.
So you basically use their token as a collateral.
Well, the way that it works is it's quite complicated. But I've got my project going, and I say to you, if you use my project, I'll give you my tokens, and those tokens, when they've all been distributed, will be the votes that vote what we do next and what we will do, what we can't do. They're governance tokens. They're a democratization of our project. And when we produced our project, it's going to go decentralized, which means we're going to say it's gone, it's out there, we've done it now, it's fixed. Now, we love it because we've got those tokens, we've got those votes, and we'll probably be developing for it because we've built in an economic model that will pay developers and pay users. And we're the experts, we built it. So we'll be a very successful user and developer for that. And that's the ecosystem we generated. And those tokens are what they're distributing. Now, if I want to go on to Compound and start, saying change this rule, I've got to have those tokens, and they burn them when they make some money. So they make the supply shrink, and they also enable people to vote and earn money by owning them. So that token gets to be worth something. And as time passes, it will go up and up in value. So people buy them because they're going to go up in value because they give them all these features. And that's a virtuous stroke vicious circle that adds value, or is meant to add value. And that's one of the things driving DeFi. All very complicated, all very Byzantine, but that's the whole game. But Compound, the people at Compound, I think are quite solid. I haven't got any money in Compound. I tried them out, put some money there, took it out again, because frankly, I really don't want to be earning $6,000 on a load of my tokens and risk some of the aspects of DeFi, which is someone come along and steal all your money. And that is a risk in DeFi. And the longer a site has been running, the longer the site has not had itself robbed, the more seasoned the site becomes, the more I like it. But another good outfit, which is semi-DeFi, is called BlockFi. And they'll give you 6% in dollars on your Bitcoin for the first 25 grand. Then they give you 3.5 to infinity. They give you 4.5% on your Ethereum, and you just give it to them, and they look after it, and you just hope they don't run off. But they're funded by the Winklevoss twins, who are superstars in the blockchain space. Fidelity, now that gets my attention, and a load of other really solid names. So, and they've raised $145 million, which is, a pretty good bottle of wine. So they are real people funded by some really great names, and they've raised a ton of money. So I'm quite happy to have a reasonable chunk, not all of it, not even a large fraction of it, but I'm quite happy to be earning roughly 4.5% on a ton of crypto, just have it sat there rather than have it sat on an exchange who are equally at risk of being robbed, like any bank essentially, but without the insurance, although there are exchanges that are insured. Rather than just sit there and watch it, I can watch it roll up the hundreds. And so that's quite interesting. And that's, 4.5%, that's a pretty good whack. And one of the wrinkles of DeFi that people will get to once they go a little bit uphill is that you can take your cash, you can put it into a stable coin. USCD, which is Coinbase's one, and Coinbase again is backed by a load of big names. And when they IPO, by the way, buy some and forget you own it for 10 years. That they will be the Google of the blockchain, Coinbase, FYI. Anyway, so you take your dollars if you're prepared for to go through the gauntlet. You turn it into a stable coin at $1. So this stable coin, they promise you, will always be worth $1, and I think Coinbase can be relatively sure that that's going to be the case. And then you lodge it on a BlockFi, and then you'll get your percentage, or you stick it on a compound and you get 3%. So now that cash, which was getting you 0.1, is getting you 3.2, and you got it in a stable coin. So that boosts your deposit interest significantly. But it does come with risk, and you might not sleep easily. And ended up going that route with BlockFi rather than with Aave and Compound, because I don't feel that they're seasoned enough for a all-in sort of deposit position. Because, you know, frankly, why do people buy government bonds, you know, US treasuries?
Because they feel comfortable, obviously.
Well, they feel comfortable because if they put it in their bank, they're not insured. You know, if I want to put 50 million in my bank, the bank goes bust, I'm going to lose a lot.
Yeah.
Yeah. If you had it in Bear Stearns or Lehman, you lost a lot. Yeah. You've got to get it out of the banking system because you're not insured. And banks do go bust, in fact, very regularly. So you put it in US Treasury bonds because as yet Uncle Sam hasn't gone bust, and technically you can't go bust because you can always print more money. And that's how, if you've got money, you get out of the risk of your bank going bust and leaving you high and dry. You put it in a treasury bond and they're going, ha ha ha, we're not paying you anymore. No. Zip. Oh, not minus now, because actually when you look at your 100 million, you don't mind paying 0.1 to have it in my bank under custody, because you don't want to have it in Deutsche Bank, Barclays, Bank, because, you know, there's a bigger chance than 0.1 of it all going up in smoke.
Yeah. I think the banks send out, I think it was Barclays, they send out a message to their customers, say you can only withdraw a certain amount of money a day. Yeah, probably for liquidity issue and stuff.
Not your keys, not your money.
Exactly. That's
I mean,
a good point.
You know, in a sense, you see, for most people, this won't, well, it doesn't affect them because they're not at scale. But if you are at scale and the forces driving these sort of movements are at scale, you know, custody is a big deal. Yeah. I mean, it breaks my heart to have to pay negative interest rates on my Swiss franc. So I have to organize my affairs so I don't. Right. So, you know, there's a lot of these big cogs are moving out there that will drive things like DeFi, and take the winners who are now valued at 150 million to maybe even much to 700, but most of them in 200 or 300 millions. Some of those winners will be worth 3 billion within a couple of years. A lot of them will be gone. So the game is to spot the ones that are going to be around in 2 years' time, or maybe even 6 weeks, because it will just go bang.
Yeah.
Yeah, and the timing it will be very difficult.
Clem, we know that online blockchain is playing into obviously the game in the market of crypto. Are you? Do you have any plans to?
It is a game. It is a game.
But do you have any plans to look at DeFi, or you know, is there anything working in the background?
Yeah, well, I mean, we're up to our ears in DeFi and blockchain stuff, and that's what we've been doing. You know, we've got our Faucet project, which is a way that people can get crypto to play with it and get it by seeing adverts, and that has been doing really well. But we've upped the pace on the DeFi stuff because that's the next wave.
Exactly.
Yeah, because
and that's blockchain anyway.
Yeah, well, the way the blockchain started was with digital money, which was crypto, which was Bitcoin. And then along came the Ethereum boys, and they said, "Oh, blockchain, we could have a computer attached to that, and you could buy computing from other people with coins, and it could be like Bitcoin but with a computer." And then everyone went, "Yeah, that's really great. What can we buy with Ethereum? And we can issue money in different coins and tokens, and tokenized tokens on the Ethereum blockchain." And the only thing they could buy with their Ethereum was Ethereum tokens. So they ended up having this huge ICO that was, you know, revolutionary. And then all the ICOs exploded out of that because Ethereum went from nothings to a lot. And a lot of people made billions and hundreds of millions and tens of millions. And they had all this Ethereum money and nowhere to spend it. They didn't want to take it out of Ethereum that had gone up so much because it was going to go up more. So they bought lots of other ICOs, and that made that mania. And then the regulators came in and said, "We don't like that, stop." And it kind of chilled that. But the blockchain plus computer, blockchain plus money plus computer, and decentralized, that enables all these finance projects that completely blow away the old system. And the only reason the old system is still here is the massive inertia behind getting up to speed on what this stuff is and the wild west craziness of it. It's a gold rush, right? And a gold rush is a very dangerous place because you might have a sack of gold 1 minute, and the next minute you've got an arrow in your back. So people have to realize that there's fortunes to be made here, but you've got to be very careful. And there's good ways to go about it, and there's ways of ending upside down in a car park. And it's very, very risky, which is where there's so high rewards. But high risk means that most people will lose, and some people will win big. Yeah? So it's a very, very dangerous place to be. But it is a massive, massive new thing, and it will be as big as crypto first wave. In fact, it will potentially be bigger because DeFi is only the beginning of this idea. It doesn't have to be in finance; it could be in all sorts of things. And if I had an army of developers, we'd be developing all sorts of amazing projects. But there's only so much a small company like OBC can do. So we're just focusing on the winner.
Okay, so we are going to look forward to the update at OBC, and thank you so much for your insight, Clem.
I think what I just said is already in the RNSs if more than 3 people would ever read them. So I don't want anyone to think I've said anything that's not already known.
Okay. Thank you, Clem.
Thanks.
Okay, so this is everything from the Financial Fox today. I hope that you enjoy the interview, and please do subscribe to our YouTube channel to stay up to date with our news and our interviews. I will see you next time.